Well, I talked about a lot on the Middle East that could possibly be the main reason that silver really goes up, but there's going to be other factors. And it's not all just about the national debt and printing money and things like that, but it's about the velocity of money. And right now, if you look, this is actually coming from the velocity of the M2 money supply, Federal Reserve Bank of St. Louis. It's an official study. It's as of 2012. Basically, the velocity of money has been going down. Now, why is that important? Because it actually is, it's not the money supply. It's the money supply is not the only factor of what's going on in the economy. It's the velocity of money which actually will determine the price of goods, if we have inflation or not. There's a video I actually did on fiat currencies when they used in the it's not the Austrian School of Economics, but they did an experiment in Austria, just so people aren't confused on that. But it's a separate video. I'll point to the link just in the comments and down in the information box. How they actually used fiat money to spur the economy in a depression in Austria. But it got into the hands of the productive middle class. So once somebody did something and they received the money, they spent it, and somebody else did something very productive. In other words, it just didn't sit in the bank vaults of freaking parasites on Wall Street and things like that. But we also have a situation today where people are hoarding money. Now, that's why we're seeing this velocity of money dropping. People are hoarding cash. People want the dollars. They don't feel secure in spending the dollars. They're not secure about the future. That's pretty much the prevalent attitude. So they try to lower interest rates, so to encourage people to buy on credit, major ticket items to make the housing market recover and all that type of stuff. Well, it's not working. People are still hoarding the money. Well, what happens is, and this is what happened in, not that we're going to engage in the same type of thing that happened in the Weimar Republic in Germany, but what happens is it's like money that's sitting behind a wall of a dam. It's all there, but there's no velocity. It's just sitting still. It's still water. Nothing's going on. Nothing's moving. And then, all of a sudden, you see, the central banks are trying to stimulate the economy by adding more and more money supply or shoring up, buying up the bonds or whatever to keep the interest rate down, buying up troubled assets and this type of stuff. But what happens is the dam begins to break. And when it does, the velocity of money accelerates. And that's when we actually have the rampant inflation. People are trying to buy goods. Basically, what happens is it starts as a trickle, and then it starts as a gush, and then all of a sudden the dam breaks, and then the velocity of money goes way up, and then you see the price of goods go way up. See, what they're trying to do is they're trying to stimulate the economy. It's almost like they're building up water behind a dam, but it's not going to happen that way forever. This is actually where the central banks can misjudge. It's a human element, and actually we did avoid a major catastrophe in September 29th, 2008, just barely, where they could actually shut down the banks, the money markets, and everything. It was just barely avoided. Just barely avoided. It's like old news now. It didn't happen. What does that mean? You're crying wolf. Now, it really was just barely avoided. But what could happen is this is an age-old problem where they misjudge. Because what happens is eventually some people will have to start saying, well, wait a minute, I got all this cash, I got too much cash, I got to, and it's not maybe the average middle class, but it could be the banks, it could be the large corporations, it could be people that are, with a lot of wealth. And actually people with a lot of wealth are actually buying up a lot of hard assets. They don't mainly hold on to cash. But large institutions today and large banks and large companies are, for the most part, flush with cash. So what happens is eventually they get out there and it becomes a spending spree. But as that happens, the middle class notices that And what they do is they try to buy up goods before the price goes up because they notice the price going up. In other words, it starts as a trickle, then it starts as an avalanche, and then it becomes an avalanche and a flash flood. So what you really have is a shopping spree. Now, will there just be a shopping spree on gold and metals and silver and maybe, but it's going to be all goods, and we may see where even yes, the silver goes up, the oil goes up, the food goes up. Now, food's probably going to go up because of what happened in California recently with all the droughts. I mean, that's pretty much a no-brainer, even without this problem. But what's going to happen, though, is that people are going to panic buy because of inflation. They're going to say, "I need this," but they're going to buy things immediately that they have to have. They think that they were thinking about getting in the future, that they think they need, they have to have, but they were going to put it off for 6 months or a year or something like that. They're going to buy it immediately if they have the money. They're going to part with that cash. What's right now, they're hoarding cash as water behind a dam. Now, this is not so much true as of the middle class, because the middle class does not have much cash to hoard, but they are still not spending as much, and it's noticeable every holiday season when there seems to be less and less spending on Black Friday or Christmas. Black Friday being after the Thanksgiving holiday. So, but like I said, I think this. Well, let me put it this way: this is an age-old thing. This happens all the time. This is where the central banks misjudge, because they're trying to stimulate the economy, and it's just like water building up behind a dam. And you looked at that first chart, which I left on quite a long time. The velocity of money has been going down, down, down. So there's going to be a major shopping spree in the future, because as this dam begins to break, the prices are going to start going up, and people are going to have to just buy before it becomes unaffordable, and that'll actually move the prices up even further. And that's what's even going to happen with silver, gold, and oil, and everything else of value. So just be a little bit patient on this deal, because when the dam breaks, that's the other side. That's the other factor besides the Middle East. When the dam breaks, the velocity of money is going to go way to hell up. It's sitting like still water right now. The velocity of money is going to go way to hell up, and everybody's going to be out buying all the goods they possibly can before they go up in price. The middle class, the banks, buying up assets or whatever, the biggest companies, the largest corporations who are flush with cash right now. Uncle Sam is telling them not to, to hold the dollars, but they can't tell them by law. They're trying to give them incentives to hold the dollars, but they can't tell them by law. So, and even the shrewdest of the most powerful people are buying up real assets. But you will see this actually occur with the middle class. There will be panic buying. So, when the dam breaks, it's going to be massive inflation. And just getting back to this original chart, this is our money, the velocity of the money supply, the M2, which is the most important, the M2. It has been going down. And they're trying to stimulate this. Yes, you could say and actually I just want to point this out. They say they're backing off QE, but they still have QE going. They're slowing down the amount that they're buying up the bonds. But, what I found highly, highly interesting is when China said they wouldn't buy up the bonds anymore, the U.S. bonds or U.S. debt, Belgium took up the slack. But Belgium doesn't have the money to do that. So who really was the buyer? I think it was the U.S. government, the Fed itself, behind the scenes with Belgium as the front man. So, QE has not stopped at all. But the thing is, the merry-go-round, let me put it this way. It's like I said before, it's like still water behind a dam. The cash is building up, cash. It's cash is actually in a bubble right now. And when that breaks, that bubble breaks, the velocity of money is going to accelerate and the price of goods is going to go way up, along with the gold and the silver. It's not a theory. It's an axiom. It's a postulate. It's a mathematical guarantee. It's just that a matter of when. Just a matter of when. But it will happen. Anyway, just want to leave you with this thought because don't lose faith by the naysayers and some of the spiteful people out there that are probably laughing at the people that are into gold and silver because they'll probably change their tune very rapidly when this dam does break. But just remember, they were one of the biggest traders and the ones that did not keep the faith in the first place. So anyway, keep the faith, and when there's adversity, keep the faith.